Americans are going to be too broke to afford to import stuff. And we don't have the capacity to produce what we'll no longer be able to afford to import. And so it's going to be a collapse in the American standard of living. And very few people are prepared for that. It's going to happen. You're going to see it through a massive depreciation in the value of the dollar. So yeah, the smart money is buying gold. I mean, they've been buying gold for years because this train wreck was obvious for years, but now, it's happening. Gold is, I think this morning at 2040. I think it's headed significantly.
Peter Schiff is an American economist, financial broker, and CEO of Euro-Pacific Capital. He is known for his strong belief in the value of gold as an investment and often advises investors to include gold in their portfolios. Here are some of his key points on buying gold. Gold is a hedge against inflation. Schiff believes that gold is a valuable asset to own in times of inflation because its value tends to rise along with the general price level. He argues that gold can protect investors from losing purchasing power when the value of fiat currencies decline. Buy physical gold. Schiff recommends buying physical gold in the form of coins or bars, rather than investing in paper gold such as exchange-traded funds, ETFs, or gold certificates. He argues that physical gold is a tangible asset that you can hold and store yourself, whereas paper gold is subject to counterparty risk and may not provide the same level of security. Diversify your portfolio. Schiff advises investors to diversify their portfolios by investing in a variety of assets, including stocks, bonds, and real estate, as well as gold. He believes that diversification can help reduce risk and improve overall returns. Be patient. Finally, Schiff advises investors to be patient when it comes to gold investing. He believes that gold is a long-term investment and that investors should hold on to their gold for several years to see significant returns. Let's listen to Peter speaks.
Significantly higher from here, multiples of its current price. And if people were smart, they would take their money out of the bank, their long-term savings. I mean, obviously, if you need money in the bank to pay bills, short-term operating cash, yeah, leave it there. But for longer term, don't leave any long-term savings in the bank because you're going to lose it. Either the bank's going to fail or the money's going to fail. But either way, you're going to lose. So you got to take your money out of the bank and do something else with it. You could buy gold and silver because it's much, I think, safer than owning cash. Or you can invest it. That's what I've done. I mean, I have both. I have gold and silver, but for myself and my clients, we own good dividend-paying value stocks all around the world. Real assets that are going to retain their value as money loses its value. And if you own a good business that has real assets and that sells products and services that customers need, then you can raise your prices and you can maintain your margins in an inflationary environment and you can raise your dividends, which is what I'm counting on. And since the income that the companies that I invest in are earning is coming from outside the United States predominantly, so it's coming in other currencies, which I expect to rise versus the dollar, then my dividends will go up for that reason as well, as you translate them back into cheaper dollars. All that regulation. And the regulation completely destroyed the banking system. We would have a much sounder banking system if it was regulated by the free market instead of by the government. But in answer to your question about gold-backed currencies, we have the technology to do that right now. The biggest impediment is government regulation, anti-money laundering, security regulation. All these government rules and regulations act as a barrier to entry because the government doesn't want competition with money. They want to maintain their monopoly on money, and their product stinks. It's fiat currency, it's backed by nothing, it's no good. The free market's alternative would be gold, which works great. And now with the internet and blockchain, it works better before because it's very easy to tokenize gold and then have those tokens available to the public to use as a medium of exchange, as a unit of account, as a store of value, as money that would be much more efficient in every single sense of the word than dollars or euros or yen. And so that's exactly where we should be going. And, I would applaud that. In fact, I'm going to be working to make that happen, to the extent that governments don't prevent it because they might. I mean, they could use their power and they have all the guns, right? They have to stop the competition, to preserve their monopoly and their ability to flood the world with their lousy fiat currencies. Look, the problem with Bitcoin is you've tokenized nothing, right? So at least with gold, you tokenize something. Bitcoin can't work. I mean, yes, as long as there are people foolish enough to buy it, the price could go up. But eventually the people who are buying it are going to want to sell it because they don't want their Bitcoin. They want to buy things. They want to buy a car or a house, take a vacation, buy food. And the farmer doesn't want Bitcoin. The guy that's selling a car doesn't want your Bitcoin. So in order to buy anything with Bitcoin, you got to sell the Bitcoin. Well, now you need somebody else to buy it. Well, if you run out of buyers, then the whole thing implodes, right? That just like any pyramid or chain letter, I call it a blockchain letter. It's the same principle as a chain letter. So it doesn't work. In contrast to gold, right? Gold is a real commodity. There's always a market for gold. At any price, jewelers will buy gold. If gold is $5,000 an ounce, they're going to buy it. The electronic industry needs gold. If it's $5,000 an ounce, they're going to be buying it, right? There's always going to be buyers for gold. And central banks around the world, if I'm right, they're always going to be accumulating gold. They need gold as a reserve, especially if they move away from the dollar. So you always are going to have demand for gold. There's been demand for it for 5,000 years. And it's because of its actual properties as a metal that it's so valuable. Bitcoin's only properties is that people think they're going to get rich if they buy it. And they can only get rich if they buy it if there's a greater fool willing to pay a higher price. On for a decade, it's gone on longer than the tulip bubble. So, it's setting a record in longevity, but, it's still going to end in disaster. The reason I think that the institutional adoption is over is because, I think that was big in 2021. They kind of got in at the top. The institutions kind of put their toe in the water at $40,000, $50,000, $60,000 Bitcoin. And they don't like the temperature. Even though it's come back to 30,000, they had to ride it down to 16,000. I think they're gone. And now all the new rules and regulations that are coming on to the space, and I think a lot of these crypto companies are either bankrupt or headed for bankruptcy. I think the bloom is off that rose. I think the institutions that dip their toe in the water are not going to completely go in. They're done. And I think those that didn't put a toe in the water are glad that they didn't, and they're never going to go near there. I think all of the rally we're seeing now in crypto is coming from the people who have been in crypto the whole time. They're getting excited about what's happening with the Fed, about the financial crisis. And so they've pulled their offers. So they're not really selling. They're putting more money in. And it's a thin market. It's also a highly manipulated market. It's notorious for pump and dump. And I think that's what's going on. I think some of the major players are trying to buy more. A lot of the trades may just be, the whales kind of moving their crypto from wallet to wallet, but they're trying to get the price up because they're hoping that the higher price will attract in some more money. That, it's that momentum and that hype that might get people excited. But I think that ship has sailed. I think all the excitement was in 2021. That was the peak of the bubble. I just don't think they're going to be able to reignite that. And at some point, this, dead cat bounce is going to roll over. And I think Bitcoin is going to plunge at the same time that gold's going to be making new highs. I mean, I think gold's broken out. It's taking off. It's about to hit new all-time record highs. It's already hit all-time record highs in, pounds, in euros, in yen, and all these other currencies. We're just a few bucks away from an all-time high in the dollar. But then there's no resistance to the price of gold, and it's just going to keep on heading higher, especially when people recognize that the days of low inflation are over, as if we ever really had them. It was all a lie to begin with. But now they can't even lie about inflation anymore because it's so high. They can't hide it with their rigged CPI indexes. And the world is going to have to reprice gold much higher when it recognizes that inflation is going to be much, much higher than 2% for as far as again, I don't think that the industry has no future. It's just that the future is going to involve the tokenization of real things. Whether it's other securities to maybe bypass exchanges. So maybe ownership of stocks could be tokenized, ownerships of automobiles and other things. So there certainly could be a lot in the future. Look, they never really needed the dollar. They needed it like a hole in the head. They put themselves into a position where they needed it, but now they are extricating themselves from that position so that they no longer need it. They never really needed it, but they were using it anyway. But we gave them a number of reasons to get out of that position. And
Yeah.
they would be much better off if they held gold as their primary reserve rather than US dollars. And remember, prior to Bretton Woods, all the countries held gold. That
Yep.
was everybody's reserve. And then when Bretton Woods came around, the reason that everybody decided to hold dollars was because the dollar was backed by gold and convertible into gold at a set ratio. Every $35 got you an ounce of gold. So if you were a foreign central bank and you held $35, you held an ounce of gold, right? So, and we were on that system until 1971. And then the US defaulted on its commitment. And so for 50 years, we've been on this crazy fiat system. And I think it's coming to an end. And I think the world is going to go back to what existed prior to 1971, which is gold being the primary reserve, just without the US dollar as an intermediary.
Yeah.
And so these countries are going to have gold. And that's much better because gold is not simultaneously somebody else's liability. It's a real asset. Nobody can sanction your gold. Nobody can take your gold away from you, assuming you store it yourself. So if China and Russia have their gold reserves in their country and the Chinese decide to do something that America doesn't like, well, America has no retaliation financially. America can't do what it did to Russia and Putin. And so people want to put themselves in a position where they're not beholden to the whims of American politicians, but also they don't want to have to loan all this money to the US government. They don't want to have to have these huge trade deficits with the United States when their own citizens would be better off consuming all that stuff themselves.